There's a new U.S. tax proposal that could raise withholding taxes on U.S. dividends and interest for Canadian investors. This is something that I don't think people are talking enough about because there are a lot of Canadians investing in the U.S. And if we scrap our capital gains, but the U.S. puts up theirs, are we not back to where we started?
The likelihood of a recession in Canada is very high.
Right.
And if that is the case, it doesn't mean that you don't invest. It does mean that you're going to be a lot more selective.
There's a story going around on X, a story about Jack Dorsey and Elon Musk calling for the abolition of intellectual property.
I saw that.
Sparked a huge debate online. Basically, the story goes on, I think, April 14th, there was a discussion that stems from the exchange between Dorsey where he stated, quote, delete all IP law, end quote.
At the end of the day, your job as an investor is to assess the major risks. And you're always going to have some of these risks that you get very, very concerned about. You try to figure out your plan B's and C's, and then you plug your nose and jump both feet first, frankly.
All right, John, welcome back to the tank here. We are just weeks away from the federal election on April 28th. We're in the middle of a snap federal election, obviously triggered by Prime Minister Mark Carney. We've got trade tensions with the U.S. We've got, the Quebec debate happening this week. We've got so much going on. I guess the thing I want to start with is that we're still hearing policies being dropped a week away from the federal election from the Liberals and some from obviously the other parties, including the Conservatives and the NDPs. Has your views changed as we head into this snap election in the next week, first and foremost?
Like, have my personal views changed or the views on who might
views
win?
of who might win? Because everyone right now is still kind of leaning towards a minority government.
Yeah, I am concerned that things seem to be leaning towards a minority government. I think I'd said to you is first and foremost, I want to see a majority government. We first, few months ago, thought it was going to be a conservative one and then started shaping up to be a liberal one. It seems to be snapping back a little bit and it's starting to lean towards a minority one. And I guess the question is going to be in the next couple of weeks. This debate, and I don't think it's going to be about policies because frankly, the policies are they're obfuscating too. I mean, they're borrowing off one another. I think people are trying to look at it from a personality perspective because they really haven't had a long form opportunity to really see. And what I don't know is, have the vast majority of people made up their mind, and there's only a few folks that are swaying or not, and I just don't know. The other thing is too, and I think this will impact more the Conservatives, is either the undecided or those that may not decide to vote. Will they decide to vote? And it's particularly the 18 to 39-year-old who typically vote as the least bloc. Will they be coming out yes or no will be the question. And whether these debates, do they help give the emotional drive in order to do that? But that's as far as I can tell.
That's exactly what I would say. I think people are less focused on the hard numbers and they're focused more on the emotional side of things, the qualitative aspects of these two, candidates, Pierre and obviously Mark Carney being the two frontrunner candidates. I don't feel like people are focusing on the productivity numbers, inflation, interest rates, housing market challenges. Like those are all talking points, but it seems like people are gravitating more to the personality, which we know is obviously what usually wins elections when you're trying to get these in-between voters. But speaking on some of these policies, because we do like to focus on the hard facts rather than some of the emotional stuff here, there was some more conversations happening around capital gains taxes. Again, still in the media here. You've got Carney and Pierre, who obviously said they're going to scrap it. And you've got the NDP who obviously saying that they're upset about this and they want to keep pushing harder on this to, fight back for the middle class. But it's interesting that we also have a capital gains conversation happening in the US market at the same time that is going to impact Canadians, right? So there's a new US tax proposal that could raise withholding taxes on US dividends and interest for Canadian investors. This is something that I don't think people are talking enough about because there are a lot of Canadians investing in the US. And if we scrap our capital gains, but the US puts up theirs, are we not back to where we started?
Yeah, what was interesting in my discussions with the government a year ago on the increase in the capital gains, and I start off from a point of, it's not about my tax bill at all. It's about competitiveness and where does capital migrate to. What was interesting was they firmly believed that the Democrats were going to win the election. And the comment always was, hey, if the Democrats win, that capital gains tax is going way, way up. So with our increase to 2/3, it's competitive.
Right.
And my retort was, well, what if they don't win? And it was like, well, they are going to win. And it was true. They really didn't expect them to. So it is a really good question. Now, the US has also been talking about decreasing tax rates as well. And again, it's about competitiveness and the flow, the free flow of capital. For me, what was the bigger question was folks who can migrate to the United States and cease Canadian residency, or the young kids who will eventually, graduate university and looking at their cost of living. That's when that competitiveness really starts to hit home.
Right. I mean, the US is saying, though, that they're viewing, these discriminatory digital taxes on American tech companies as a reason for them wanting to put in these taxes. If they pass this, it's a tax on US dividends for Canadians could jump from 15% with treaty benefits to 50%. Obviously, registered retirement accounts could lose their current tax exemptions, leading to more larger unexpected tax bills. There's a lot going on here. And then the whole thing about saying, tariffs are a way to bring things back into the US. Yeah. So what if you reduce taxes, though, in the US? You have got now tariff taxes, which are taxes on the consumer at the end of the day, right? Because everything kind of gets passed on. So you're saying if they reduce, if they do tax reform in the US, reduce, taxes for individuals and corporations in the US, you still have the tariff taxes, though.
Right. But you do all that. And let me ask, when you graduate university, where might you go?
Right? I know.
That's the problem. Right?
Not Harvard right now, because they just lost a couple $1 billion for not agreeing to what the government is telling them to. And that's a whole other can of worms I'm not willing to open up right now. But just sort of sticking on sort of the elections here, where do you think conservatives or the liberals will gain the most amount of attention a week out from this election?
Yeah, the only thing that seemingly, again, if you're using the polls as a directional guideline, and frankly, I have a lot of concerns, over the polling over the last 6 months. But if you're just looking at the trending, so right now you're seeing the liberal lead starting to shrink, and then you look and say, well, what's really causing that? Well, people are ascribing to the threat of Trump. Is it going to be as bad as people are expecting? Or does it matter who's leading? And the whole Trump issue was really an obfuscation of the real underlying weakness of the Canadian economy. And people are starting to go, hey, you know what? Maybe we overreacted on the impact of Trump. What you and I had said before is don't focus in on things you can't control. You can't control what they're going to do, but you could only control what's going on here. And then the question becomes, if that statement is true, and I think I'm seeing a lot of comments on both X and on LinkedIn saying, hey, wait a minute here. You know what? why we keep on focusing on this up and down with this individual who is really could manage the domestic economy better. And I'm seeing those discussions. I wouldn't say a whole lot, but they're kind of filtering in there a little bit. So long way of saying perhaps the impact of Trump over the next week or two might start to decrease, perhaps, unless he does another crazy thing again, which, boy, don't be surprised if that happens.
No, you're absolutely right. I think you're absolutely nailing the key issues. It's economy, housing affordability, and how to best handle Trump. And because the Trump card is sort of taking a bit of a back seat right now, because he's taking it easy, there's more exemptions, he's changed his decisions every single day on what is included and not included in USMC and whatever. There is a lot of people saying, okay, maybe that is not as big as a problem as we thought because it's kind of whittling away. Let's focus on the other things: economy, maybe housing affordability and security, and cost of living and investment. And maybe that's where Pierre can gain some ground in these next 10 days or so leading up to the election. I want to switch gears here, though, for a second, because we talked about this the other week, but now there's more stories coming out about how it's going to impact our market. So we talked about the crazy move in treasuries, the 10-year jump from 4% to over 4.5% last week. It's now hovering around 4.30. But these high rates are what typically lead people to shy away from riskier assets. Yes. So we saw this huge boom in VC deal value. A lot of it was from these big AI chunky deals we saw in Q1, was about 126 billion in the US market. Still down from obviously the peak numbers of sort of the COVID bump, but these rates are starting to hurt a lot of people's decisions on when they want to take on more risky assets. So with the market volatility the other week, treasuries obviously selling off alongside stocks and sort of this very unusual combo that sort of lacks faith in the US economy in general. There's probably some economic red flags that we should be talking about here. How do you think with potential higher unemployment projections, surging prices, and slower growth are going to be potential headwinds for the private sector, like venture capital and private equity?
Well, I think just using Canada just for the moment, the likelihood of a recession in Canada is very high.
Right.
And if that is the case, it doesn't mean that you don't invest. It does mean that you're going to be a lot more selective. Some of my friends who are tremendous entrepreneurs in Canada for a very long period of time, Matt, you joined me at a dinner at one of them, and remember what he said? He's been through 4 recessions.
Right. Yeah.
And he got stronger as a result of the recessions because people didn't prepare themselves. And what he said, and I'll never forget this, during the recession, I traded off profitability for market share so that once we exited the recession, I was able to blast out, take that gain in market share, and then increase my profitability. It's those sorts of decisions that I think do separate individuals. I can speak to you as an investor. Our firm's never been this busy in our history. It really started around September of 2024. And it's because, from an investor perspective, the markets move in times of greed and fear. And we are in a time of fear, but this is where you do make your moves. But it's not for everyone. So short answer is I do think there's going to be a lot less activity, but the ones where there is activity, there's going to be some significant movements. Those with great balance sheets to get through it are going to get through it. But I think where people make a huge mistake is they freeze up and go, oh my God, I'm out for the next couple of years until I see, where we're going. Well, guess what? You actually miss the opportunity as well.
The analogy I think about is like in stock car racing, when the red flag comes out and everyone has to slow down and wait for the dust to clear, right? some people decide to go into a pit stop, right? They refill up on gas, but then they come out one lap behind at the back of the pack. And what you don't want to do in this situation is when the red flag comes out, meaning the recession flag, don't go back into your kind of bear cave and sort of hope that things will just pass over and don't do anything. Because then when the gun goes off to start the race again, and you're at the back of the pack, the people who are waiting and sort of making individually small moves just to stay alive, and the analogy to real business is maybe taking lower margin business, maybe taking business opportunities that your competitors won't do because the price is too low, but it at least keeps the lights on and keeps your engine moving so that when they do end up increasing their spend on your software tools or whatever, you already have that relationship and you already have that market share owned by yourself while others are waiting at the back. That's the way I think of it.
That's a great analogy. You know what, Matt, it's always interesting to me. Again, I'm speaking with an investor hat on. The obvious, thing you hear, make sure that you buy low and sell high. Like, no shit, Sherlock. The number of people that actually do that is a very, very low number. And so when the market was at its peak in, ignore COVID, but, 2019 to 2022 or thereabouts, you and I both pulled out of the market because it was insane and waiting. And it was really, really hard to do so.
Totally hard.
Because so now that the market is probably going to go, and I'll tell you, the biggest part is it's also in the United States. It's the uncertainty. One of the stalwarts of a great country is policy that is predictable and consistent. This is causing the most havoc in the United States.
Yeah.
And so I get that part. But at the end of the day, your job as an investor is to assess the major risks. And you're always going to have some of these risks that you get very, very concerned about. You try to figure out your plan B's and C's. And then you plug your nose and jump both feet first, frankly. And, you're always on the thin edge of the wedge of either looking like a genius or a fool. And the truth of the matter is most people are in neither. And I think that it's going to be a good opportunity, but we've been warning businesses, fix your balance sheets, get your unit economics right, but don't be so concerned about profitability. Right. Meaning that you can gain market
share. It's a different mindset that you have to learn, but not pulling your foot off the gas, just doing it in a different way. That's exactly right. And one thing I want to get your thoughts on, John, there was a story going around on X, a story about Jack Dorsey and Elon Musk calling for the abolition of intellectual property.
I saw that.
Sparked a huge debate online. Basically, the story goes on, I think, April 14th, there was a discussion that stems from the exchange between Dorsey where he stated, quote, delete all IP law, end quote, arguing that the current system exploits creators, prioritizes litigation over innovation, and basically slows progress. And Musk responded with an agreement, amplifying, obviously, the sentiment in the tweet to go viral, basically claiming that IP laws, including patents, copyrights, and trademarks, create barriers to creativity and favor entrenched interest over fair compensation for creators. This is something that people have talked about for a long time, but when you have these voices speaking about it, what do you think? I mean, IP laws are pretty outdated, particularly in the context of technology like AI, blockchain, digital economies, and so on. There's always been this sort of gray area where tech companies break a lot of IP law, outdated laws, and then they beg for forgiveness or they pay a fine. But they got so much movement while the law was trying to catch up to them, in the case of AI right now, that they've already gained the market share before they end up getting penalized for the rules that they were breaking, like OpenAI for scraping the entire internet's data when they didn't have licenses to do that. So what do you think this does, or does it do anything right now for ways to change the laws or even compensate creators?
Yeah, IP laws haven't changed very much at all. It certainly is worth a look at it. A couple of things on the IP front, right? People confuse having an IP on something as value in and of itself. No one's ever said that. You have to, create the right, whether it's an invention or process or what have you, that's of value first. And really, the value of the IP is the freedom to operate. Where it gets abused is the larger companies have the financial advantages, and then you can go bankrupt as an innovator, where somebody's attacking you and you have to defend yourself. It's not the original inventor of the idea of the process, it's who's got the best resources to have filed it. What I don't really like is the businesses that are created that are simply uh, buying up all of these patents and then are trolls, and were never in the business in the first place. But to eliminate it, part of the challenge is, of course, is if you were to do that and you were a small company, and you've invested as an investor or as a founder a lot of R&D, and then your bigger competitor looks at it and goes, hey, this is awesome. Well, I have great marketing and distribution, and I am going to basically replicate that. Well, how does that encourage innovation as well? It doesn't, right? So, uh, but I was intrigued by the tweets because they're taking it from the position of it's actually anti-innovative as well because it doesn't give a lot of the startups. But I'm not sure I take it that extreme, but I do think it's absolutely worthy a great debate
Yeah.
on how the current architecture of the IP system is today.
I agree completely, but what actually scares me more as a bigger issue, rather than rewriting the IP laws for in the ways in which maybe the Western civilization, abides by them, is the immense amount of theft and economic loss that Western companies face from Chinese, basically companies infringing upon IP laws that are not being held to account. So we've got numbers that are a little dated, but they're over 600 billion a year of IP theft from China, from American firms a year. You've got obviously, global trade tensions right now happening where if China basically says, you know what, we were thinking about abiding by your IP laws, but now we're just going to go for all of it. There's a lot of videos on TikTok now about companies basically posting videos on how Birkin bags, like the Hermes Birkin bags, are being actually manufactured in China, and the raw ingredients that are going into manufacturing only cost around $1,400 US. I think is the number I saw, versus the price tag that they sell for in the US market for $36,000. And they basically said the rest of the value that it costs is all on the branding and the logo that they basically manufacture in the US or in Italy. And so they're saying, hey, just come buy the bag directly from this wholesaler. We'll sell you the raw bag. We just won't put the Hermes logo on it, and you'll save, $30,000 or something. So there is that risk here as well, that the biggest infringer just says, you know what, come to the manufacturer and we'll break all the laws for you, and they'll never get us for it.
Yeah. But isn't it a little bit too bad that the US is now pissed off the rest of the world?
That's what I'm saying.
They could have aligned themselves with all of the countries of the world that actually believe in the rule of law. And yet the one country that has upheld the rule of law for the last 75 years has decided that the rule of law may be for chumps. And that's now the problem. If China does that, then it's a free-for-all.
Right. And this is actually a big reason why they should not be open sourcing AI technology, right? You can send over your specs on building a Nike shoe. Not really going to change a lot of things. You could send your specs over on how to manufacture a $50 or $100 microwave. And yes, they can steal it from you and they can produce it themselves under a different brand. We know China has done that many times. In fact, they've probably broken down a Tesla vehicle to its raw ingredients and then build, their own BYD cars as well. But I think when it comes to software, that is something you do not want somebody having your source code to.
Yeah.
And ripping that off. We've seen it happen. But that could change the entire U.S. economy for a very long time. And we're seeing Boeing basically being held, out to pasture through these trade efforts by China saying, hey, we're no longer going to produce the parts that you need to make the Boeing aircrafts.
Right.
This is getting very, very scary because of how interconnected global supply chains are. And I think it's going to come to a head very quickly. I don't know when, but hopefully it ends very soon. But John, until next time, thanks for jumping the tank as always.
Thanks, Matt.